Bitcoin and really the wider cryptocurrency markets are looking pretty dicey at the moment. We have economic turmoil coming out of the Chinese markets that is weighing pretty heavily on the crypto markets right now. We also have the Fed likely to announce tapering measures this week. Also, the US infrastructure bill is coming up to its deadline. I'll be discussing all of that and more in today's video. My name is Lark, and every day I make videos talking about cryptocurrency investing. So if that's a topic you want to learn some more about, make sure you subscribe to the Lark Davis channel. Gently tap on the thumbs up button for the YouTube algorithm and click on the notification bell so that you know when I put out a new video. Now let us turn over to the charts to get started off with today. We can see Bitcoin currently trading just below the 200-day moving average. Of course, that's our bull bear line here for the market. Still 19 hours until we get a daily close here for Bitcoin, at least from the time of recording this video. Hopefully we do see the candle closing above the 200-day moving average. That would certainly be nice. If it does not, we could see some further downside coming in for the markets. $44,500, $42,500, and $40,000 are the next major areas of price support here for Bitcoin. Now, I currently have a bid in for Bitcoin at $42,500. It's actually been an open bid for quite a while. I think I made it somewhere back here at the start of August. That bid's just been chilling there on the idea that at some point we could see a retest of this particular area right here, flipping that old resistance into new price support. We'll see if we do get down that low. This was probably the closest retest we might be getting for that particular area. But if we do get some further price correction, well, then I'm ready to buy that when it happens. And if it keeps dipping beyond $42,500, well, I'll deploy some more cash there too, because I'm not going all in at $42,500. Just a little bit of a nibble, stacking some sats if we do get a deeper dip situation. If that order never gets filled, I'm fine. I got plenty of Bitcoin. If it gets filled, awesome. I'll add some more to my stack. Now, it seems like we are going to fulfill the September prophecy. The prophecy. There's this reality of, if you look back through the charts, Bitcoin in September, for whatever reason, usually ends up being a red month. Yeah, I know altcoins have gone crazy this month, and a lot of those altcoins are going to finish the month actually in the green because they've gone up so much, but a lot of those will also have some pretty wicked wicks on top of those green candle closes for the month. We are down quite a bit for a lot of the altcoins from their all-time highs a week or two ago. A lot of those have come down 30, 40, some of them even 50% already. We've seen a big correction in the altcoin market very, very quickly, as of course so often does happen. But more often than not, focusing on Bitcoin here, we get a red month in September. We have 10 days left in September to see if we break this trend and if we finally get a nice green candle for the month of September. But with all of the macro stuff going on, a red monthly candle close, definitely looking like a more likely scenario at the moment. Now, with that being said, very important thing to keep in mind here is that I still believe Q4 will be very, very bullish for crypto, and that Bitcoin is still going to go on to hit $100,000, potentially more, by the end of the year. Now, in 2013's bull run and in 2017's bull run, Q4 was massive. It was massive. The price of Bitcoin pumped by more than 300% in both Q4 2013 and Q4 2017. Now, a repeat of that situation for Bitcoin would bring us up to around $200,000. Whether or not we get that bullish, I mean, a Bitcoin ETF approval, that would be the kind of spark that would get us up to $200,000 in a very, very short amount of time. This has happened before. There is historical precedent for those kind of price moves to come in. And of course, if Bitcoin does that, just imagine what all of your altcoins are going to do. Just a word of advice, thoughts, I suppose. When we see Bitcoin making its parabolic run and hitting a blow-off top, most people will get totally caught up in the mania, totally caught up in the euphoria, most people in the market will have incredible paper gains. They'll be millionaires on paper for a few days, and then they're going to give it all straight back to the market. And they're going to wait to sell because, the market's going to pump back up. It's going to pump back up, and it's going to go down some more and go down some more and go down some more. And some people will end up selling at a loss, which will be totally crazy considering how much money they could have had they realized some of those gains. So just a reminder that as we get ready for what I hope to be a very bullish Q4 for the wider cryptocurrency markets, to have a plan. Because the old saying goes, failing to plan is planning to fail. Remember, have a plan for your investments. By the way, if you want to buy the dip, you need to have a good exchange account to do that on. My recommendation is Binance. It is the exchange that I use the most by far. You can use about 50 different fiat currencies to buy crypto on Binance. If you use the link down below to start your account, you're going to get 10% off of your trading fees and up to $700 in bonuses when trading futures over on Binance. Now let's get into the news. 3 big stories to keep an eye on this week in the market. And look, we talked about some of the stuff last week. We talked about some of the stuff back at the start of September, that these are the big stories you have to watch out for in September. Well, they're all weighing on the market now. The first one we're going to talk about is the infrastructure bill. Now, the infrastructure bill in particular, this may be delayed. Deadlines for politicians are just fictitious numbers that they make up. We're going to have a deadline to pass the bill by this date. A delay would not surprise me at all. There hasn't been a lot of media hype, I think, in the House discussions around moving this bill forward. Currently, the infrastructure bill contains some pretty bad language around crypto, and we've talked about that before here on the channel, but just a quick rehash in case you haven't heard much about this before. Basically, this bill will introduce legislation that will make anybody who stakes cryptocurrencies, mines cryptocurrencies, or any developers who would like to deploy any kind of software related to cryptocurrency have to go and get a broker's license, which is completely unworkable for all of those categories of people. An exchange like Coinbase, they can comply with that. Everybody else will have an incredibly difficult time actually trying to do something like that. So it's a step backwards for cryptocurrency innovation within the USA. The Treasury Department came out and said, hey, I know that's what we're going to write into the bill. We're not going to enforce that. That's BS. I don't trust the Treasury Department for a second. I don't know why anybody would. Hopefully we see a last-minute effort to try and change some of this language, but there hasn't been very much buzz around what's happening in the House of Representatives. Chances that we're going to see the infrastructure bill passed with the current language pretty high at the moment, to be honest. The silver lining, of course, is that if it does pass as is, it's bad legislation, but at least it's regulatory clarity, which is something the market's been asking for a long time. It's not the kind of regulatory clarity we want. It's bad regulatory clarity, but clarity, nevertheless. The market may react fondly enough to that, even if it is bad legislation. Next up, let's talk about the Federal Reserve. So, since March last year, the Federal Reserve has been buying $120 billion a month in bonds and mortgage-backed debt. Now, that has had a nice little effect on the U.S. stock markets in particular, in the sense that the Federal Reserve keeps being this market maker in a very serious way, gobbling up all of this money off the market every single month. That's showing a strong amount of enthusiasm in the markets, and that there's a lot of confidence in the markets. Now, the fear is that when the Federal Reserve starts tapering this off, which is likely to be announced this week, that tapering will begin. That's the thought. Has not been confirmed. We'll see what happens when they make an official statement, but that is the current thought process, that we're going to see the tapering announced this week. How much tapering is going to go on, how quickly that tapering is going to happen, that is going to largely determine what is going to happen to the equity markets. And when the equity markets catch a cold, the crypto market also tends to catch a bit of a sniffle. We shall see how much the market reacts to this. It's this kind of fear and uncertainty and doubt about what's going to happen that makes the markets a very tumultuous place. When investors have this lack of certainty, then they get a bit worried that things get bad really, really quickly. It's funny, you think that some of these big funds and stuff like this are like really serious people who are masters of their emotions and all that stuff. They're just as panicky as a lot of the retail market is. So we shall see how the Fed story plays out. I'll update you during the week as to what has happened with that and what the impacts may look like they're going to be for the wider markets. But definitely this is a story that we need to be watching this week, as we should get an announcement on the Fed's plans for tapering. And finally, let's talk about what is happening over in China now. Last week, I shared the story with you about Evergrande. Evergrande's a major real estate developer in China. They are basically plummeting. It's being called the Lehman Brothers of China. Now, this is half as much debt as Lehman Brothers had, and you have to think that the debt that Lehman Brothers had in 2008 is a very different, real number compared to what $600 billion was back then. $300 billion these days. It's not as much money. Let's keep that real. But still, it's a big story. Millions of properties are going to be liquidated at rock bottom prices. So some people will get some really great deals on properties. This company is done for. That debt will not probably be paid. We could see a lot of creditors, that's banks and rich investors, being left out here as this property giant goes under. We could see efforts from the Chinese government to step in and make the impact of this not as bad, or try to bail this company out. We haven't had any indication that that's what's happening yet. Chinese markets are continuing to react unfavorably to what's going on here. The Hang Seng Index has dropped 4%. Evergrande shares continue to fall down. This kind of fear event is exactly the kind of thing that will push investors back into cash. Well, they think that it's going to get even worse than what's going on right now. China, of course, a massive cryptocurrency market. Those investors may be liquidating some Bitcoin and some Ethereum in order to be in cash while they wait out what they think could be a worse market correction. Now, this has just opened. Weekly opens can be a bit dramatic sometimes. We shall see over the next few days how the market is actually pricing this Evergrande story in, and if it starts to spread to other locations. U.S. markets will be opening up pretty soon. We'll see likely Chinese ETFs, Chinese stocks listed on U.S. exchanges potentially also going down, and any companies that have heavy exposure to Chinese markets also potentially taking a hit in this situation. But in a few weeks' time, my guess, unless this is a Lehman Brothers-like situation where it is the domino that wrecks the entire global economy, possible. These kind of stories always bring up those sort of fears. Likely not the most probable situation, the most probable result that we're going to see. So we're going to see how this all plays out. But more likely than not, in a few weeks' time, all this stuff will be bridge under the water? No, water under the bridge, Lark. Get it right. Get your sayings right. It'll be water under the bridge, and the market will have moved on, and we'll be ready for our big Q4 blow-off for the cryptocurrency markets. Fingers crossed, anyway. Your question for today. Do you think that Bitcoin is going to end September as a red month, or do you think we could have a last-minute pump, see the markets moving up a little bit, and we'll just eke out a little bit of a green candle close for the month of September? Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.